Next, we'd like to invite Mr. Asada Shinji, the president of One Capital. The theme is Corporate Venture and Venture Capital in Japan. We'd very much appreciate your questions in the Zoom chat. The moderator will be Mr. Taratani from JETRO. Mr. Asada, the floor is yours.
よろしくお願いします。
Yes, thank you very much for having me. Thank you.
はい。
聞こえてますでしょうか。
Thank you, Mr. Asada. Can you hear me all right? Yes. Mr. Asada, you worked for Itochu and Itochu Global Solution, and then from 2012, Itochu Technologies Ventures, you've been working for these companies, so major Japanese corporation as well as corporate venture capital, and you is the head of the Salesforce Ventures, so you worked for the fully affiliated CVC in Japan. So you have very rare experiences working for these companies. And based on your experience working for Japanese CVC and foreign affiliated CVC, working in both local and international corporates and CVC in Japan, what have you observed the key differences between these two? So the difference between these two, I'd like to answer. But before that, Itochu CVC, that was what we called hybrid CVC. The 20% of the fund comes from the parent company, Itochu Corporation, and the remaining 80% was based on the financial institutions, so that the investment requiring some return. So this is what is called a corporate CVC, but it's like just a pure investment. So how we communicate with startup is very similar to independent CVC. So we need to let startups to generate a return, and we'd like to leverage, we wanted to leverage the resource Itochu group has. So that is what I'm engaged in. And Salesforce Ventures, on the other hand, this is not the pure investment, but rather we were trying to help Salesforce customers, clients, and to facilitate and nurture their startup. So that is the purpose of the corporation, and we invested in Sansan and Free as well, the example of the startups we've invested in. And there are some problems and domains that Salesforce product is unable to solve, and we've invested in such startups offering solutions for such domains. So that is the major purpose. It's something different from the investment we are just taking for IRR or to build the partnership. So this is the difference between international and local CVCs. Okay, thank you very much. So in that regard, I think venture capital and CVCs, you've been engaged in pure investment as well as the CVCs, but I think the setting KPI would be difficult for the corporate venture capital, and in doing so, what are the differences between these two? So the difference, in terms of pure investment, I think as long as you gain the return, that would be okay for the independent venture capital. I'm running my own venture capital, but what is important to me is to make a return based on the investment coming from our clients. But yes, of course, we need to focus on the return. But in my case, I focus on enterprise software. That is my commitment for our investment in fund. So I am not expected to make investment for other domains. So that is the boundary set for venture capital. And CVC, on the other hand, I've touched on the hybrid model of Itochu CVC, but when you'd like to do CVC, what is important is you need to make investment that would contribute to the clients of the company, of that corporation. I think this is becoming blurred. It's not that CVC is difficult, but there are some domestic CVCs that have some difficulty in making some trouble in that regard. On that, I'd like to be more specific about that. I can be more specific about that, but let me finish here. Okay, so fully affiliated international CVCs, yes, I've seen many CVCs in San Francisco, in the US, and they consider financial return and strategic return both. They are in the dilemma between these two. And is they are switching strategies between these two in some corporate venture capitals in the US as well. And in that situation, for example, the VC, the people working for VC maybe start working for corporate venture capital in some cases. And when that happens, I think the difficulty may arise. And what would be that difficulty and troubles they may have? Okay, so I think the policy may be vague in some cases. So excellent service model, I think, is that the investment requiring products with some maturity, I think the investment needs to make for that phase. See, not seed or Series A, but in the middle late stage, that is the good timing for investment because the product partnership and cooperation and existing customer satisfaction can be improved. That is a mandate you need to achieve. Then if you are to make investment in the seed phase and when the clients are very excellent for and important, for example, like Toyota Motors, which represent Japan, when you get the offer, the app to such important clients, and but many startups have failed in the seed phase. Of course, like they may make a significant pivot, right? Yes, that quite happens. So they do pivot a lot of times. So they will change the target from the automotive industries or insurance. That quite happens all the time, right? So I think it's important to focus on the CVC needs to focus on middle to late stages, not seed or early phases. And in terms of the return, the profit or strategic return, but I think when you make investment the middle to late stage that would not generate a result, then such startups may be likely to fail. So the Toyota Motors like excellent companies, and when you offer services to these clients, well, but if the result of the startups would not be turning okay, then the corporate venture capital lose faces if they offer services to such important clients. So whether you can gain the monetary return from the investment, that is important. So whether you need to hire people who have experience in deal sourcing so that they can be let handle the mid to late stages. But if you're engaged in seed early phases, or let people without experience for investment and to start some corporate VC division, then that would create a significant mismatch with personnel and the business required. So that would be less likely to succeed. Okay, thank you very much for your input. So what is important is to focus on late, mid, and late stage, and also you need to hire people with experience in the investment. Okay. Okay, we'd like to move to the next slide. The next slide is in an ideal world, most corporations are keen to work with startups for productive and service innovation and leverage the R&D resources available in organization, ideally speaking. However, only a small number have succeeded in the pursuit of a positive outcome. In doing innovations, they make investment, but they can capture good synergy with the startup they invested in. There are a lot of examples like that. And under such circumstances, what do you think are the reasons for this? I can name more than three reasons. Yes, please. So how should I wonder? So new business creation, that sounds nice, but whether that is related to the main business of your company, I think that is the first criteria. Innovation, of course, would arise from something distant from your main business. You can see that in a lot of books, but some people tend to think that distant businesses would be okay for your company, or you can take some risk to go for such distant businesses. But I think that is not the case. You need to see the relationship, whether the new business is related to your main business. That is itself is fine, but when you work together with startups, you cannot make success when working with startups to do distant businesses. What is important is rather to acquire startups if you'd like to be engaged in some businesses distant from your main business, to buy them and sourcing them or do some due diligence. But it will not work very well to have partnerships, so to speak, with a new startups for new businesses. The startups would be pleased if major companies would offer partnership with such companies. They would be very glad to do that. But I think that varies whether that would make sense. And the research needs to be conducted in tandem with the startups. So Web3 startups, maybe the recent trend, some are asked to work together with the startups, but I think it's fine to conduct research and studies at startups. It's like paying a consulting fee to these startups to learn from them. So when you can set trend or business stance, you can learn these startups from these companies for the unrelated businesses. But when you would like to do together with these startups, that is something you need to be very careful about. You need to first think about what you'd like to do with them in the first place by yourself. You need to set the target by yourself. And another thing is that if you don't have any resources in your company, then you should not be engaged in such activity because that will not likely to succeed. So these are the important things criteria. Thank you very much for answer. So internally, so yes, there will be cannibalization of resources internally in large corporations, right? So many companies are doing a lot of things within the company. So there may be some cannibalization in terms of the internal resources. I think that could happen. On that part, how? Yes, you can address. So I think Salesforce has a very good ecosystem designed and built internally. So how about the input against the cannibalization?
カニバルビジネスを成功させ
In
た
order to make the collaboration a success, I guess the number of such companies is quite few. Maybe 35% of stock prices as filed in Netflix, as you know, even though they were regarded to be one of the fine companies in terms of management. And but this was caused by the delivery of a DVD because they do not have a physical store. They only have the warehouse, but they have benefit from the wave of streaming. And if they have took the course to cannibalize totally the delivery business of DVD, so because they have started to go with streaming. If because they have made a decision top down. There's actually a book on this, and they have commented that even the executives have made this kind of a course, and even those have resisted have had to leave the company. So if you want to really succeed in criminalism, you have to do it top down. You have to make a firm decision. And maybe that's the only solution that I can think of. Maybe cannibalism can occur within the company, the Salesforce, a company like that, in a big company. Maybe it might happen that the company that will be investment can be a competitor because the pivot can occur because they may be targeted to similar customers. As a method of making investment, is there anything that you take into consideration? It's quite simple. You do not make investment to potential and actual competitors. Because honestly speaking, if we just look at these with this perspective, you will not be able to find safe places, but there are actually some of them. They were 600 globally, and we looked at them carefully. And there were only three companies that were in some peers come in a competitive relationship. And actually, this can be supported by figures. The sales marketing aspect that we will look at when filtering the competitive investment companies. But there will be a very slim line between the when you call it two difference because they are the direction of other companies' strategy. But if you do not focus on that point, you will not be able to clarify this. We look at the products carefully and we just reject this in webinars. We can do it anytime. The management matter at that time had the badge from that time. And so we always continue to have a better understanding of the product. Thank you very much. Now I would like to move on to the next slide with the next question. Can you move on to the next one? Sorry, I think we talked about this already. I think this is the last one actually. Would you give us some advice when we want to promote corporate open innovation to yield a higher success rate? Maybe it can be a summary of what we are overall comment, but please give us your advice. Please set up an organization called corporate development and have to fulfill a certain roles. Partnership and investment is the first one because they will have to make an investment in order to supplement the function of their core business. That is called CVC. That is to say, it is aimed to supplement the function of their own products. For example, in the domestic customs, when the case of Salesforce, they had to enter the information of the business cards manually, but it didn't work. And so they created a system so that scanning of the business card will do everything necessary in terms of gathering information. And the next point is M&A. M&A, I guess there are three targets. One target is somewhat distant, which is attractive. And you acquire the companies when they are distant but very attractive. And the second one, it is quite similar to minor investment I earlier mentioned about, because acquiring means that you will be able to get the supplementary cover. And so the point is getting a supplemental company. And the third point is acquire. If it is a company that's producing their own products with excellent engineers. And in Japan, there are many contracted companies to produce other companies' products. One possibility. So I think that the first point, I guess this will be the best practice. The software giant like Lava and Salesforce, maybe the size is about 2 billion. The tech companies in general, they all have the corporate development division as an organization. And look for this name of the organization and LinkedIn. Even you can find it as super as the president right now. I think that's a shortcut for success. And at the same time, I see some big companies that are incorporate decision. But I'm talking about corporate that means all companies in an organization involved. Yes, I believe that will be true. I do have several questions from the authorities. When you work as sales for self-interest, you were working with CVCs in other countries, but you were making investment focused on the Japanese market. Under that situation, when you look at Japanese startup, we do not see many startups that are operating on a global scale. Or the question is, do you think that they will really go to the global market? That's a question. What will be the startup? Yeah, actually, that's a very difficult that we face. This might be a little converted question. Think that the cost and another e-commerce company that has been listed was a unicorn from the domestic market. But you can be big within Japan because there are now at the third, and they have a lot of opportunities that happen in Korea, Indonesia can get a big share within the domestic market, and that will be one important point. And it depends on the business model. In the case of e-commerce, it is quite difficult for them to become global, but there is one exception, the giant Amazon. This can be one layer that I can think. And then what should we do in order to go global? Let me give you an example of making investment sufficient business. This kind of companies, it's easy to go beyond the borders. If you do not do this, you will just open your borders and other companies will just eventually enter into your market. So you need to do this in order to protect your market. For example, there's software to manage the invoices, but for example, the system is totally different from the US and Japan, so this wouldn't happen. Collaboration is another field that we are making investment. But if you go globally, then it means that you'll be able to move on.
CVC にとって、投資先
So one last question for CVC. What was required for CVC to contribute the value for the companies they are invested in? And also, what are the functions required by the startups other than introducing clients? And also, should we not run CVCs based on the cooperation, collaboration for value? What do you think? Okay, so the companies we invest in, what they require CVC to do? Okay, that question. So major companies, I think, use the one to access these existing customers of your company. So that is what I hear often from startup management. And if they achieve that expectation, they will feel sad. So I think you need to introduce customers to these startups, especially by some scheme or structure. It's not things like you can use this service in a unique way and to utilize this service. And that can be leveraged by the employee of your company as well. And also the second part, whether we should run CVC to value up of the startups. So what is good about collaboration with startups is that we need to focus on the fact that the startups need to raise fund in 8 months or 12 months in a short period. So you need to inject fund and money to them to attract potential clients to the company. So for example, we need to wait for 2 or 3 years to have partnership with Salesforce. Injecting money, you can change the speed of the startup. So by injecting money, investing in startups, you can enable collaboration, and that reputation would be well regarded in the startup community. Of course, the opposite is true. So thank you for your time, Mr. Asada. This is the last question we wanted to ask. Asada-san, thank you very much for being with us today. If we have any additional questions, we'd like to let you know and do some follow-up. Thank you very much for your time, Mr. Asada. Thanks for having me. Mr. Asada, thank you very much for being with us today.